that frustrating feeling? You're sitting there waiting for a hot new crypto token to finally hit an exchange, and when you can finally click buy, it's already up like 1,000%? Yeah. It's because while you were waiting, a tiny exclusive group of insiders had already been holding it for months. By the time you're in, they're already miles ahead. Well, today, we're cracking open this hidden world. In this explainer, we're going to show you exactly how pre-market crypto actually works. I really want you to ask yourself, why are you always late to the pump? Why is it that the exciting new projects you find are already priced so incredibly high? Well, the answer is simple, but it's something most retail investors totally miss. By the time a project hits a major exchange, the price already reflects a massive amount of mainstream hype. You aren't early. You're basically arriving at the finish line of a race that started months ago.
So to understand how to actually get early crypto access, we have to talk about the pre-market. This is literally the most critical window of time. It's the phase before a public listing ever happens. During this window, a much smaller, highly targeted group, like early financial backers, hardcore community members, or specific platform users, gains exposure first. This is where the foundation is built, way before the public ever gets a say.
Okay, here's our game plan for today. 1. The crypto information gap. 2. Who gets in early? 3. The pre-market process explained. 4. Why retail misses out. 5. The high risks involved. And finally, 6. Smart, responsible investing strategies. Let's dive right in.
Starting with Section 1, the crypto information gap, public versus private.
Just look at the stark financial impact of this gap. On the public exchange side, prices are driven up by massive hype and, public demand. Everyone's scrambling for it. But on the pre-market side, the entry price is set before that public frenzy ever happens. Because of this, early participants often get significantly better entry terms per token compared to that eventual public listing price. They're buying based on early valuation, not hype. All right, Section 2. Who gets in early? Let's meet the pre-market VIPs. So who actually gets this access? There are generally 4 main groups here. First up, venture capital funds and angel investors. These guys are doing private seed rounds, taking on massive risk for the lowest valuations because they're putting up huge capital. Second, we have launchpad platform users. Some platforms give early token access just for holding or staking their native token. Third are community contributors, the folks actually in the trenches helping build the project. And fourth, specialized pre-market traders. These are people using specialized platforms to trade a project's expected future token via points before the token even exists. It's kind of like trading an IOU for a coin that hasn't even been minted yet. Crazy, right? But here's the thing. Getting in early isn't always about having massive VC money. Look at this quote we pulled. Some projects reward early testers, developers, or active community members with token allocations. This is literally sweat equity. If you're in the community early, grinding, testing the product, helping out in the Discord, you can absolutely earn your way into this exclusive pre-market group. Moving right along to Section 3, the pre-market process explained, from idea to TGE. So how does a crypto token generation event actually play out? Here's the typical timeline. Phase 1, a project announces their token, usually via white paper or Twitter. Phase 2, early access opens up. This could be a private round or through a launchpad, and it usually requires some sort of application or staking. Phase 3, participants actually get their allocation. But wait, here's the catch. It's almost always subject to a vesting schedule. That means the tokens are released gradually over time so everyone doesn't just dump at once. Finally, Phase 4, the TGE, or token generation event. The token officially launches, hits the public exchanges, and the madness begins. Which brings us to Section 4, why retail misses out. Looking at the hidden barriers. Look, the reality is that massive walls are built around this phase to keep the average investor out. Historically, this stuff was strictly for accredited investors, meaning you had to prove you had a high net worth just to play. Beyond that, gaining access requires an insane amount of research. Major news sites aren't talking about these projects early. The alpha is isolated in super niche Discord servers and Telegram groups. Basically, if you aren't doing the deep digging yourself, you're just going to miss out. Now for Section 5, the high risks involved. Let's talk about the dark side of the pre-market. I cannot stress this enough. You are operating in the Wild West here, which means you have a terrifyingly high exposure to scams. Scammers know you want early access, so they actively target you with fake pre-sales, cloned websites that look identical to the real thing, and nasty phishing attempts designed to completely drain your wallet in a second. The security risks are just massive. And honestly, even if you avoid the scammers, the crypto pre-sale risks are brutal. There is absolutely zero guarantee the project will ever list publicly. It could just go to zero. And remember those vesting schedules? Those lockup periods can freeze your funds for months while the price is tanking and you can't do a thing about it. Plus, pre-market valuations are 100% speculative. Add in all the regulatory uncertainty globally right now and yeah, being early means you are incredibly vulnerable.
So let's get to Section 6, Smart, Responsible Investing Strategies. If you're going to play in this space, especially with launchpad crypto investing, this is your mandatory checklist. Step 1, treat pre-market investing as a hyper-risky bucket, totally separate from your core portfolio. Step 2, do the deep dive. Research the team, the backers, the actual tech. Step 3, only ever use reputable, well-known launchpads. Never, ever connect your wallet to some random unverified link. And Step 4, keep your position sizes incredibly small. You absolutely have to respect the massive risk you're taking on. So, getting in early is definitely not a guaranteed lottery ticket. It requires serious discipline. You have to ask yourself, are you truly ready to do the intense, community-level research required to find these projects safely? Or are you just blindly chasing the hype of the next big pump? If you're ready to put in the actual work and you found this explainer valuable, make sure to hit subscribe. And hey, drop a comment below if you want us to do a follow-up explainer analyzing some of the real, reputable pre-market launchpads currently out there. And finally, a quick reminder, this explainer is strictly for educational purposes and is not financial advice. Pre-market crypto investing carries a remarkably high risk of loss. You could literally lose everything due to illiquidity, project failure, or outright fraud. Always, always do your own research. So next time you see a coin launch, just ask yourself, are you buying at the starting line or the finish line? Thanks so much for hanging out with us, and we'll see you in the next explainer.